stage is set. All engines go. Welcome to the angle. Let's start the show. Hold on tight. The stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. It's a beautiful day. I know it's been a little while, but I'm back, and hopefully I'll be back a lot more frequently. You got me today, tomorrow, and Friday right here on the channel at 9:15 a.m., so make sure you come hang around not only today, but tomorrow and Friday as well. Now, we have a very, very, very interesting day ahead of us, and basically for the next week, we're going to talk all about it on the program today, but we have a lot to talk about from after market yesterday. We got a lot to catch up on. We got a lot going on in general. So let's get right into everything real quick. Last night, we had a big move up. Well, conversely, big move up after hours on the SPY, mostly due to Oracle reporting some very frothy guidance, basically saying that they're going to double their earnings essentially year after year after year, which is pretty lofty. But they're pretty confident about it. That gave a lot of confidence to your AI businesses. You saw NVIDIA go up on that. Basically, all of our bigger tech names up pretty big on it. You see NVIDIA up about 3% right now. Microsoft up about 1% off of some of the hype off that. Part of the reason, I should say, that these companies are now seeing a little bit of a bounce into today. On top of that, we broke over the old all-time high on the SPY this morning, even before PPI data came out. And then we had PPI data come out and made another new all-time high in the pre-market here, and we're still moving up as of right now after getting some level of retracement cool-off into the open here. Currently, off after that PPI print, the all-time high on the SPY is 654.80, so we're going to watch that into the open here, obviously, to see if that's some level of a resistance point as we head throughout the day. Now, as it pertains to PPI, there's a lot to absorb. There's a lot you want to take advantage of, or at least be knowledgeable about. And some people I've seen online said that it's been a horrible print because PPI came in at 2.6 and what was expected is 3.3. That is well below expectations, which in this scenario is going to be a good thing, mainly because it would be bad, right, if the Fed had to deal with continued rising inflation and labor market weakness. So essentially what we're setting ourselves up for with this PPI print potentially is lower inflation and a bad labor market, which would give the Fed theoretically the green light to cut multiple times, which the market's going to like, right? We want the rates to come down. Those weaker companies get stronger. I've talked about this ad nauseum on the program, but essentially with a PPI print like this is hinting more towards that the Fed can cut rates a little bit more aggressively than previously predicted. Now, as we've been talking about on this program, basically next week, I believe it's next week, someone fact check me real quick, but the next FOMC meeting, that 25 point basis cut point is basically cooked in. It's baked in. Everyone's expecting it. And we're starting to see some bets hedge towards 50 basis points cut at that meeting, which would be a little aggressive, but it looks like the market may be able to handle that. It's very interesting. When we go from a rising rates environment to I want to say stagnating or flat environment, right? Not raising, not dropping, we're just unchanged, to a lowering or dropping rates environment, things economically change very aggressively, obviously. And what we're going to see, or what we could see, is a violent move in equities to the upside, and conversely, eventually, a sharper pullback on those equities as well once the Fed has started cutting rates, which I've talked about in this program as well. As the Fed cuts rates, it tends to cook in a little bit of bearishness longer term. So near term, it tends to get some level of a bear market going on. If you don't believe me, feel free to fact check it yourself. Every single time the Fed has gone from a raising rates environment to a lowering rates environment, it has seen a sharp spike up in the market in general, followed by a deeper move down, which is what we're kind of looking at here. Now, you guys know on this program, I've talked about how I personally would prefer in the month of September that we got that pullback to that 610 area. Right now, I'm wrong. I've been wrong so far, and it seems like we're not getting that yet. The catalyst for that, which I'm starting to theorize, could be CPI, and it could be that FOMC meeting. Because, as I've said before as well on this program, if the Fed, or I should say, if the market is front running that rate cut, that could be interesting, that it could lead to that downfall to the market, as the market has already baked in even a 50 basis point cut potentially. It's definitely cooked in a 25 basis point cut in my opinion, but it may start to cook in this 25 basis point cut into the market, which if we see a 25 or 50 basis point cut, the market may actually react negatively simply because the move is already baked in, right? Buy the rumor, sell the news kind of thing. So that's kind of what I'm theorizing here. You got to keep in mind that we have OPEX coming up, and at the end of September, it's the end of the quarter. It's end of Q3. So the opposite side of that equation, where, again, looking at as a devil advocate to my own argument here, is we may see an attempt at a window dressing into Q3 or the end of Q3. A window dressing is when the market looks really nice, everyone gets their bonuses, right? Because everything's up at highs and whatever, and the market holds where it is. We push a little higher perhaps before coming down into October. Now, I believe we're overstated for that pullback right now. However, as I've said in our community over exclusive trading, I've been very aggressively leaning more towards day trading over swing trading right now, simply because of the fact that day traders, I think, have more leverage in this environment than swing traders. Now, obviously, if you're swing trading or overnight trading, you have that overnight move exposure, which tends to be where a lot of the gains and the losses are made in the stock market, which is exactly why I've been personally day trading more so than swing trading in this environment, because I'd rather get my money and get out versus have more money exposed overnight. So personally, I've been leaning more towards a day trading philosophy, at least in this area, because I am cautiously bullish, right? I see the bear signs and I'm ready for the bear signs, right? As we continue to grind up, like I'm not going to be surprised if we get a pullback, but I'm also not going to try to pick up pennies in front of a bulldozer, as I like to say. I'm not going to try to continuously short the market or swing short the market or anything like that continuously over and over and over, because the market is still showing signs, some level of pretty decent resiliency. And today's PPI report backs that up. So you have kind of a very interesting, potentially explosive setup today after PPI. So as I just explained, that PPI report came in, and that was enough to give the idea that because of how it came in, that the Fed gets the green light to cut and cut more aggressively, which the market's going to like. It's going to be more bullish overall. That in combination with that Oracle report and general bullishness that we're seeing overnight in the AI sector, specifically NVIDIA, up near 176, a huge move between yesterday, intraday, and up to where we are now, which I'm personally feeling a little bit because I owned 175 or 172.5 calls or 170 calls, something like that. And I took profits at 30%. So feeling a little sting there where I could have made a lot more money, but it's okay. Money made is better than money lost. But you're seeing a big move on NVIDIA here on the daily, and you're above right now this key LOI of 171.58. You consolidated around the 50 MA. You're going to be above at this open, or pretty close to. Let's just double check here. Yeah, as long as we open up here, you're going to be above every single EMA. You're going to be above all your short-term EMAs, which shows a potential trend reversal in the near term, and above all your long-term EMAs, which is good for what you want to look at in terms of longer-term trends. So essentially the last 5 days or so, we kind of fluttered around the 50 MA and beneath this LOI here at 171.58. Now we're looking to gap above that. If NVIDIA can sustain above this, you could get back to this pretty decent area of liquidity between 180 to that key resistance area of 183.30, which if 183.30 breaks, this thing's clear skies to really push to the upside here. As I've talked about on this program before, that 183.30 level is so key as a level of resistance on NVIDIA. So you're going to definitely want to keep an eye on that even today. That's a big push. We're already up 3% in the pre-market, but you could argue some people are loading up some shorts down here. They're going to get squeezed out, etc. You could see a pretty big move today, but we'll walk you through all of that live on the program. Now, guys, I asked you this twice a stream. I'll ask you once now. I'll ask you one more time before. Do me a quick favor. If you haven't already, please interact with the stream wherever you are. Like it, share it, say hi in the comments down below. I see Negum's in the chat. What's up, my friend? Thanks for popping by. But any little level of support for the algorithm, I appreciate, and I appreciate all of you that take your time this morning to spend watching me watch the market and kind of talk you through things and make sure that I can try to keep you as safe and as educated as possible and hopefully as entertained as we stare at red and green lines. So do me a quick favor, please subscribe, follow, etc. if you haven't already. And remember, once we get to 500 subscribers over on the YouTube channel, we will do this show every single day. So if you enjoy the content here, do me a favor, pop over to that YouTube channel, hit subscribe. Thank you very much. All right, quick plug is out of the way. Let's focus in on the SPY. I do want to mention real quick, we normally do our Catalyst Watch, so let's pop over there before we get into what I want to talk about on the SPY here. Now today at 10 o'clock, there's scheduled to be the non-farm revision, so that could push things either which way. So 10 o'clock is going to be a really finicky area. You also have U.S. wholesale inventory at 10 o'clock. So you're going to want to keep an eye on that. So 10 o'clock, we should see some level of volatility come into the market. We also have Trump receiving an intelligence briefing at 11:30. Who knows? He could talk to the press, whatever. So at least be mindful of that during that time. But outside of that, not much happening throughout the day. And obviously overnight, we have CPI into tomorrow. So keep that in mind if you are swinging any short-term positions or anything like that as you head into tomorrow. You want to manage your risk appropriately into a very key event like that. Now, CPI typically is good for a 1% push on the SPY either which way, depending on where we close. So typically with CPI, you're pretty good for a 1% swing. So in this case, we open up here or we close around this price. You're looking at a $6 swing at least on the SPY either which way. With CPI. Now, if I'm a betting man today, I believe we were going to push to the upside, leave a wick, and come down and close basically right here on this POC would be pretty nice. But worst case scenario, more around the 652.21. But I think what the more likely scenario case is going to be today is going to pop up probably north of 655, 656-ish area intraday off of this POC, get a rally there, and then kind of leave a wick and come back down. That way we're kind of questionable into CPI. At least that would make sense from a daily perspective. So the market is now open. Let's keep an eye on everything and we'll walk you through the market as the day goes on. QQQ selling off a little bit here in the open as our SPY. You're going to have people taking profit. Makes a lot of sense. So what we want to see here is how the market basically reacts here in the first 5 minutes or so. Do we get a sell-off, bounce, and run? Are we going to sweep liquidity at the 200 MA here on SPY, or perhaps even 652.21 before getting a sharp reversal? It will be seen. And keep in mind, again, we opened up about $3 on the SPY. decent little gap up and above all-time high. So it wouldn't shock me if we saw a little bit of a defensive, a little bit of selling here, people taking profit back to this general area here where we have old all-time high at 652.21 and where the 200 MA is, for getting a little bit of a base and a rally to the upside here, looking to break that pre-market high today. That would be kind of what I'm eyeballing here on the day. Looking at IWM, got a little bit of a sell there, but it's looking pretty good here. You should see more bullishness out of IWM. So in general, remember we talked about rate cutting and how important it is for smaller companies. That's very important for IWM, the Russell, because the Russell obviously is going to be very affected by the potential of bigger rate cuts or more rate cuts, right? So as a result, if we see a rally come out of IWM today and also the Qs remain somewhat defensive to bullish, we should see all engines go on SPY to actually get a pretty strong push here intraday to make a new all-time high, which technically we made at the open, but I mean a new all-time over that pre-market high. So we will wait and see what could be in the cards for the market today as we head into the open a little bit more. Looking like IWM is pretty flat here at the open. Qs and SPY both sitting around their 200 MA after the open here. Our VVIX is at 99, so you're going to want to see that come down a little bit, but it makes sense that we see a VVIX pop on the day after last night, even though we see our VIX down. So this is why I try to talk to you guys about volatility. There's not always a one-to-one relationship. So our VVIX opening up so high makes a lot of sense considering that we had such a big move, or a relatively big move overnight, even though our VIX is dropping right now. So there is a possibility that volatility on the VIX today remains heightened or elevated, especially heading into CPI tomorrow. So I would be very careful if you're someone who uses the VIX to trade as it pertains to the stock market. If you're one of these people who thinks if the VIX goes up, the market goes down and vice versa, because a day like today, especially leading into tomorrow, that may not necessarily be the case. That's why I like to tell people it's not always a one-to-one relationship. It's more of like a 80-20 kind of relationship with volatility and the stock market. NVIDIA kind of mirroring the SPY here, came down a little bit, back testing that 200 MA on the open and wicking and trying to get a little bit of a reversal here. SPY consolidating here. Like I said, what I'd like to see after we get a little bit of a sell-off here is bulls kind of defending down here, build some level of a base. It would be better. Like I said, we could get a little bit lower here to the 652.21, but it would be better if we kind of build a base right around here, then rally it pretty hard and break that pre-market high. NVIDIA showing some strength here. Meta not showing much strength after actually getting a sharp sell-off. Didn't really get much of that strength that the rest of the tech giants seem to have gotten overnight, with the exception of Apple as well, seeing some bearishness if my chart loads here. A little bit of a sharp sell-off as well on Apple. Yesterday, Apple had their little tech presentation thing. And I made a little post on X about how Apple has all the money in the world, all the resources in the world, but for some reason they can't innovate. I actually really dislike Apple as a company. Hopefully they use all the money they have and they can invest in some innovative ideas. I would trade Apple. I would not be an investor in Apple because I think companies that get very comfortable in what they do, you can perfect what you do and that's good. But basically releasing the exact same phone every single year for like the last, I don't even know how long, 6 years. I think the iPhone 11, 5 years, 6 years. The iPhone 11 was like the last big update. And you guys can let me know if you disagree in the chat. Apple, in my opinion, is actually falling behind the curve in terms of the smartphone game. Everyone's just using it for convenience. They're used to using an Apple product. I actually got my wife to switch over to an Android, and she prefers it a lot more. And I think that's a real risk factor for Apple. They have a ton of money, so they could actually buy out one of these more innovative companies and use some of their technology to implement it into their products or even create new products. But they're just too defensive for me right now in terms of in my opinion, they're resting on their laurels, which is not a company I necessarily want to invest in, especially when you're looking at a company's lifestyle. When you're in that maturity phase, you make a lot of money, people like your products and stuff. If you rest on your laurels and you don't innovate, you don't build new products, you don't build new exciting things, people get bored and they don't buy your products anymore, and you just lose because everyone else is trying to compete and take your market share. And that's a real risk to Apple's business model in general, in my opinion. Pop back to the market here. getting a nice little rally. Let's see if we can actually push through this. Basically, you have two areas to watch right now on the day. This 654.22 area, where you kind of had a little bit of a double top here in the pre-market. And then again, that 654.80 area on the spot. So getting over those two areas here and pushing with volume, which I think is a realistic possibility today, will get a pretty hard move on SPY in my opinion. You want to keep an eye on NVIDIA here, which is back at the highs. I think NVIDIA realistically does actually have an opportunity today to get to that 180, 183 area, which sounds crazy. They're already up 3%, but you got to keep in mind, being down here, sitting in the doldrums for 5 days, you're going to have people who are loading up shorts and whatever. They're going to get scared out of their positions here, and that's going to add a little bit of fuel to the fire here for NVIDIA. And also, people wait for moves like this on NVIDIA and FOMO in, and they'll buy more NVIDIA. So I actually think we could see a pretty big day here on NVIDIA. The other thing you want to watch on this daily chart on NVIDIA specifically is 180.67. You call it 180.68. That's your red SAR on the daily. Getting above that is a big break for NVIDIA that puts you back in this little consolidation zone, again, between 180 and 183.30. And that could lead to a very bullish continuation pattern on that 183.30 break. Now, obviously, it doesn't come without risk. We have CPI tomorrow, FOMC next week, and we also have OPEX next week. So that does not come without risk, but it is a very solid look on the daily chart if the bulls can sustain the momentum, hold this gap up, and push harder. So there's some qualifiers to that, but if the bulls can keep it together here, I really, really like NVIDIA here short term. But again, that does not come without its own kettle of risk. Hatchet says in the chat, agree, Apple is not hungry anymore, and it's in their culture now, very hard to change. Yeah, unfortunately, that's the way a lot of mature companies get, and it's a little bit more dangerous when you're an Apple versus when you're a waste management. A waste management company, or literally Waste Management, the company, who goes around and collects people's garbage. There's not really much to innovate there, and your moat, at least in terms of like people threatening your business, probably relatively low. I don't know how you would innovate garbage pickup. Maybe people would, but that's not really a threat to their business. They could stay in that mature phase for a long period of time. When you're a tech company, that's extremely competitive. If you don't innovate, you will get left behind, especially as a tech company. And that's why I really don't like Apple. Like, I really, really, really don't like Apple. As an investor, as a trader, it's great, whatever. They have a ton of money. It's relatively safe. But as an investor, it's not great. Now, really today, Apple should hold at least 230. If it loses 230 today, it's not going to be a great day for Apple. It's steep too. And I think the market is going to look for Apple to participate in some level of a rally here, or at least some level of a push here. And also Microsoft. So Microsoft not looking good either. I spoke about yesterday in our community how important that 500 level for Microsoft is. And if you look out on the daily, you are so tight here, and bulls are really trying not to let this thing fall. As long as the bulls can really keep it above and at this 500 level, then Microsoft is going to be okay. However, if the bulls cannot defend and keep Microsoft pumped above this 500 level, it is going to pull down at least 30 points here to, I'm saying, this 464.79. That's kind of what I have my eyes on. Now, I will publicly short Microsoft. I'm looking for a little bit more confirmation. I even said this, I think I said this last week. I'm looking for a little bit more confirmation because we're seeing a lot of like basically fake outs for the bears, where it looks like you could have had a bear confirmation move to the downside on Microsoft, but it gets pushed back up. So I'm not looking to get too aggressive on a short on Microsoft yet. But on the daily chart, this isn't great, but it needs more confirmation, need a little bit more volume. The other thing you want to keep an eye on here is your MACD tried to reverse here around the 4th of September. And again, it's looking like it's trying to curl up here on the daily. So I don't necessarily want to front run that either, because the momentum is in the bear favor here. Theoretically, your RSI is at 41, which is showing bear momentum. Your MACD is starting to try to curve out here. So if there's some volume that steps into this price and we hold the $500 level, it'd actually be more interesting call. So either which way, it looks like you could have a good push here on Microsoft in the interim, kind of in the near term. I'm at least looking for 30 points of downside if we see a breakdown. And I'm looking basically to get back, I mean, you could even conservatively say 30 points of upside here on Microsoft in the near term. So if you're someone who like strangles, It's something I was shopping around for yesterday. You could look at a strangle potentially on Microsoft. Obviously, 500 would give you the most liquidity. A strangle right now on Microsoft, just ballparking numbers, adding them together, $23. So meaning you would need at least a $30 move, or that's what I'm saying for. Or, I'm sorry, you need a $23 move off of 500 to make profit. So at that point, you could look at a strangle here on Microsoft if you're at least theorizing a 30-point move, and this is for October 17th. If you're theorizing a 30-point move, you're spending about $23 for the strategy and looking for about $30 for an exit. So that gives you roughly 25% gain on a strangle. So that's something you could consider if you like that idea. That's something I'm ping-ponging around in my head if I want to take that trade or not. So I'm just kind of waiting to see, because there also could be the case that I could just pick one side once it's confirmed, either up or down, and might have a little bit less risk and actually probably make more percentage-wise and dollar-wise gain if I do that as well. So kind of depends on how you want to trade, but I don't hate that idea. Something at least I'm tossing around right now if you guys want to consider. As you can see right now, Microsoft is floating around that 499 level. As I said before, NVIDIA is hot. Watch 180 as a whole. If you break 180, it's not going to surprise me to get up to that resistance level today. Believe it or not, we're already up 4%. It can continue to push. If we see the other Mag 7 companies start to participate, because if you notice, Meta's red, Microsoft's red, Google red, Apple red, Tesla red, Amazon red. And NVIDIA is the only one who's green, and the market is still holding this 653 area. So if we see participation by Meta, by Microsoft, by Google, by Apple, which are all honestly not looking great today. So far, I'm just flipping through these. They're not looking good. Let's load up Tesla here. If it loads, Tesla's not looking great, but near support. Amazon not looking great. They're all selling off here in the open. If we see some support come through with all the other Mag 7 names, then you could see a really, 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 really nice day. But as it stands right now, NVIDIA is going to put the market on its back and try to hold it up as we see some decent bearishness come in across the board. Eddie says Apple has the ecosystem and people locked into, and they make it a pain to switch over one product at a time. Yeah, that's kind of what it is. It's the pain of convenience. And speaking from real experience, again, with my wife, she was so resistant to the idea because she's like, I like FaceTime. And like, that's little dumb things like that, just because they're convenient, are why people will spend an extra $500 and keep a phone that, in my opinion, is superiorly inferior than a lot of its peers. Because of convenience, like you said, the ecosystem. And if Apple can continuously keep people in their ecosystem, then, they keep their business. But what happens when someone theorizes a way to make it very easy to switch? And it's not necessarily easy to switch because we're talking different operating systems. But what if someone thought of a way that made it very easy to switch? And we already have a lot of competition with similar things like FaceTime. There's Google Voice. There are competitive things that are very similar, right? But if someone can streamline the simplicity of Apple, which I would argue it's not even super, comparatively, it's not like Android's even complicated. Android is just more customizable, if anything, which you don't even need to do. Like when I got my wife her phone, she was a little nervous at first because it just wasn't an Apple. But after 10 minutes, she was like, oh, this is kind of fun. I can play around and do all these different things and whatever. And she was happy. It was just that much better. And now she loves it. So once that narrative starts to get out there, you can get a better phone for cheaper. A lot of the times has better specs on it. I know my phone has fantastic specs and it costs $500 less than an Apple phone or a new one. It's just, things are going to change. Eddie mentions that group chats also. He wrote, Apple users hate when Android is in the group chat. You're right. And this is like dumb Valley Girl kind of things. Like, oh, you have green text message bubbles? I'm not going to talk to you. Dumb things like that. Dumb things like FaceTime. It's just things where they're creature comforts, right? It's like, oh, the box is blue around your name or the box is green around your text message. Ew. Like, okay. Dumb things like that will eventually go by the wayside, especially if a trend in some sort catches on. It just takes one silver bullet, I think, to kill Apple if they don't innovate. It takes one product by Samsung or by any of these other competitive phone makers, Motorola, whatever. It takes one silver bullet to really put a dagger in the heart of Apple's iPhone business, in my opinion. Now, it will take time, and it's not going to be overnight, but it takes one silver bullet with one TikTok trend behind it that is going to kill Apple like that overnight. But until that day comes, hey, I'm just not going to invest in Apple. It is what it is. Now, like I said before, Apple could innovate by just purchasing companies that are already innovating. They don't even need to be creative. They can just buy the other companies that are creative, and they should, to be frank. Because otherwise, I don't have a lot of faith in Apple long term in general. Obviously, they're sitting on a mountain of cash. They've got a strong moat. They'll be okay. It's just, how okay will Apple actually be long term if someone challenges their business model? Toby says, from a fundamental standpoint, Apple is the worst choice above the mega caps in terms of PE growth and future earnings growth in comparison to a lot of other companies. That's something else you want to keep in mind. Conversely, or I guess the counterpoint to that is when people are looking at mega caps, they're not really concerned about fundamentals. Yes, they are, but they matter a little less. What matters is growth in the future and whatnot. But I would even argue Apple's not even, like, Apple should be competing with NVIDIA. They should be, and it's not like they're forte by any means, but they should be opening up data centers, right? Look how much money NVIDIA's making, right? They have the ability to open up their own competitive business that is NVIDIA's business and challenge them in some degree, right? And not only help power their own future, right? Like, when you have so much money, you have the ability to do something, you just choose not to. It's silly to me. It doesn't make any sense. Hatcher says, I have an Apple family and I'm a tech support guy. We're not changing unless my kids want to do their own tech support. Fair enough. Yeah, I feel a little bit passionate about Apple because I know a lot of people. All right, Apple was cool when Steve Jobs was around and remained pretty cool. They innovated, they had really good ideas. And now that we're at this point in time, I would argue Apple is not cool. It's just the status quo. And that's different, right? There was a time where buying an Apple product actually made you cool, right? It was hip, it was trendy, whatever. Now buying an Apple product is just like expected. So what happens if something ends up being cool? And that's kind of the thought process I want to present to you guys more from, again, like an investor standpoint. I'm not talking bearishly on Apple where it currently sits from a technical perspective or anything. I just mean longer term where my head is at as it pertains to Apple specifically. I think Toby summed it up best in the chat. He said, it's a hold, not a buy for me. I can agree with that sentiment pretty fairly. All right, we're seeing a little bit of a move here on SPY, but I'm not really seeing NVIDIA selling off a bit. Who's helping the SPY get a little bit of a pump here? Tesla a little bit. Huh. It's got to be the IWM. It's got to be your small caps. Yep. So we're seeing a little bit of a move here on the SPY. Actually not from your Mag 7 names. We're actually seeing it from our smaller cap names, pushing our sentiment here a little bit on the market as we're above Open's price. So that's very interesting here. Like I said, as IWM should continue and remain bullish today, it should stay true. Like, it should kind of just melt up slowly today. We still are in this area where we've got until 240-239 before I go, maybe we're a little too hot here on IWM. So you still have another $4 of clearance here on IWM, which you're probably going to get if CPI comes in. I don't want to say cool or hot, because depending on how the market reacts to the data and what it means could influence price. So if CPI comes in bullishly received, I'll say, it wouldn't shock me if we tap out this LOI tomorrow, or between today and tomorrow at this 242.39 area. So right now in SPY, there's a realistic possibility if we can see some strength come into the Qs, if we can see some strength come into our large or mega cap, I should say, that we'll get a hard rally. And it looks like we're building in a base on a lot of these names right now. Meta's trying to slow the bleeding here. Microsoft as well, hovering beneath that 500, getting over that 500 is probably going to push it pretty hard here. Google was and has been kind of hot, so seeing some bearishness today is probably going to be expected. I'm not going to look for Google to push hard today. I'd be pretty happy if Google, again, if I'm a bull in the market today, I'd be pretty happy if Google just kind of chills out today and doesn't do too much, where it can stay bearish, get a little bit of a retracement, but not really participate with a rally necessarily, but just kind of hang out here. You're seeing Apple put in kind of like a quasi little mini inverse head and shoulders down here on the day. It needs to get some strength pretty quick though. It's got to get over basically 230.16 and push here in the next like 5 or 10 minutes. Now keep in mind that non-farm payroll revision will come down the pike here in about 9 minutes. So the market could be waiting to see if that revision means anything. Tesla, similar look to Apple here, and Amazon trying to put in a base down here as well. So we're seeing a lot of our Mag 7 names, a lot of our mega cap names, trying to put in a base near the lows of the day, while IWM is trying to hold things together to perpetuate some level of a rally here. As I say that, we get a little bit of selling. And Qs are selling off. All right, we got a little bit of bearishness coming through. Who is the culprit? NVIDIA a little bit. Meta a little bit. Amazon a little bit. Tesla seeing a lot of volatility here. We get news? We might have gotten some news. Let's just check. Don't think we have any. Unless one of you guys can let me know in the chat. I'm not seeing anything on my news aggregator. But it's possible something came out to cause that little blip there. I think I might want to take a stab on Amazon calls. That's ballsy. It's interesting because Amazon's in the gap right now. But it actually looks like it might get a little bit of a rally here. So I might take some Amazon calls. We do have data in 8 minutes though, so that makes me a little apprehensive. So I might wait. Where are we at? 231. Maybe I'll wait. I do want to take a stab at something here though, because I like how all the Mag 7 names are building some level of a base here. I'm just trying to pick which one would be the most advantageous. I've had some good luck with Microsoft this week. I've traded it quite a bit. Let's look at the 500 calls for this week and see what they're looking like right now. They're pricey. Granted, we're only $1 away, which isn't shocking. Implied volatility is a little higher than normal. So maybe I wait on that. There might be a better name out here. I don't really like Meta. Like I said, our Mag 7 names look like we're trying to build a base here. But I want to pick the correct name. And that might end up being NVIDIA because it has been showing the most strength. It's not going to be cheap. And it's obviously taking a risk with obviously higher IV. But it's one of those scenarios where I might want to consider putting my money where my mouth is. Yeah, I'm going to take a stab on NVIDIA. Yeah, I'm going to take a stab at the 180s here on NVIDIA. Let me pull it up on the screen here just so you guys can see. Oh, wait, let me fill this first. Okay. All right, I'm in long the NVIDIA 180s at 127. Get this out for the Discord. Right, tomorrow's the 11th? No, 12th. 12th, 180 calls at 127. So the reason why I picked NVIDIA, I understand they're expensive right now. I understand the IV is high, and I added the contract up here if you guys want to watch. However, it's also the most bullish Mag 7 name as we're sitting right now. So if I'm theorizing that the other Mag 7 names are going to participate in some level of a rally, then there'd be no reason why NVIDIA shouldn't lead said rally. So that's why I'm going to pick the leader on the day here on NVIDIA. and look for that 180 tap, and break hopefully, to get that push on the upside here. Now you have 5 minutes until data, so this one is going to be a little bit of a crapshoot in terms of how data will affect it. You had a nice push here. We came back down. We're consolidating around the POC here. We wicked a little bit lower, came up, so you're seeing some level of consolidation, reaffirming the strength that this 177.50-ish area has, which again is a strike. So you want to keep an eye on those whole number strike levels. Before we get a little bit of rally here, your MACD's coming down. You're going to want to see this round out here. You're going to want to see your RSI over 54. So once we see the MACD round out and we get that RSI over 54, which on this next candle we're at 53, we should see a small push here prior to 10 o'clock. So prior to 10 o'clock, I'm going to look for basically right around here, 178.13 as my first target here on NVIDIA, and then kind of go from there. If we tap that, what is that, 178.13? 50 cents, so it's about half delta. Delta's 34, so probably about a 17-20 cent gain per contract if we get that. So what would that be? We'll say 147. So that'll give you about 15-16% if we tap that price target before data, which isn't bad. So we will wait and see what happens here. The market's definitely waiting. This 10 o'clock is going to make or break pretty cleanly. We will make or break. I do want to swing around to our sectors here, but I feel like that's going to change. Because we normally go to our sectors, and today we just haven't yet. So let's pop over to our sectors real quick, as long as I'm back before 10. Some strength out of utilities here, up about 0.8%. Ooh, I just got an alert fired off for BRBR. I'll bring that up with you guys in a little bit. I feel like long opportunities. Energy, very hot. Up 1.5%. Big move on energy. Conversely, and we've been talking about this, consumer staples is not moving with its defensive partners here. Now, this is interesting on the day, where we're seeing tech up 2%, and we're seeing mostly our defensive sectors being green as well. So that's going to give you some area of caution. In general, simply due to the fact that your more risk on, which is going to be your XLK, is green, while your more risk off or defensive sectors are also green. Now you're getting a little bit of retracement here on utilities, but on energy, it's looking pretty healthy. Like we're going to get another leg here potentially. So that's something you want to keep your eyes on here. After 10, we're going to come back to our sectors and see how this looks. Real estate up a little bit. Materials up a little bit. I'm saying a little bit, but relatively it's pretty solid. 0.6%, 0.7% on industrials. Healthcare down, but looking like we're going to get some level of either a base build before a rally or some level of stagnation here. So some level of consolidation around this 0.5%. Financials pretty flat, but looking like it's trying to push up. Consumer discretionary down pretty big. So that's mostly your Amazon and your Tesla, which we saw fell off at the open. So this could be kind of like a dip buy opportunity if we get some level of reversal here momentarily. And comm services just down 0.7%, which I say which is normally a pretty big move, honestly. But because we're seeing so much volatility today, comparatively much smaller than a lot of their peers. So let's pop back to the market and on NVIDIA, which is down a little bit now. Those contracts trading at 119, still holding this general POC area. Momentum stalling out. Looking again for this MACD to start to round up as we push above those short-term EMAs. Clearly waiting for 10 o'clock. This is going to be a make or break on this one. SPY floating around the 50 MA on the 1 minute. Red SAR here. So if we get good news, good push here on the 10 o'clock, you're going to get a nice rally. It's a good setup. And IWM looking at this triple top break here. If I knew we didn't have news right away here at 10 o'clock, I'd be very interested in an IWM 0 day here. Very interested. I'm not going to do it though. If you at home, if you want to do that, God bless. I bless your trade. Be safe. But this is looking, if this breaks this triple top, that's going to give a lot of strength to SPY, and SPY set up to push here. So if the Qs can get it together, it's going to be a very bullish day for the market. VVIX is still very high, just sub 100, while our VIX is still grinding lower. So there is a chance here, especially at 10 o'clock, because right now that we see, what I want to see essentially is VVIX come down and volatility come down. That would be a great sign, and that would reaffirm that we're going to get a strong push to the upside today if we see VVIX come down and volatility move into decay. All right, back at entry on those NVIDIA calls. Pop open NVIDIA here. We're at 10 o'clock. Let me see if we can pull up my news aggregator and see if we get anything through there. Okay, Trump is going to speak with the Prime Minister of Poland today. I don't know if that was scheduled or not, but that just came across. Watch NVIDIA break this red SAR here and push to the upside potentially. We're at 131. Again, my first trim, I'm looking at this like 178.13 area, depending on volume there. Your MACD starting to curl up with bullish momentum at 55. So you're seeing a definitive reversal here off of this POC area where we built some strength. You're above all your short-term EMAs, above your long-term MAs. Trying to break the SAR here to get a continued rally to the upside. SPY at new high a day and technically new all-time highs. Again, you're going to want to watch right here, 654.22 and again, 654.80. Those are two key levels here on the SPY today. Breaking those two levels, that gives you clear skies for like, I mean, obviously I was going to say 655, but that's 20 more cents, so it's not crazy. But like 656, even 656, like 50, like a little bit higher. But again, this whole move needs to have some volume behind it. If IWM gets legs here, which you're trying to break this triple top, it's going to push pretty good. You need help from the Qs, though. We need to see some big tech step in and push this a little bit higher. NVIDIA's about ready to pop. It's very close. If it gets a little bit of volume here, a little bit of momentum, it's going to get a pop. I might take a stab on IWM on a 1 DT because it might just fart around here, and I just want to safeguard myself a little bit. But I'll go a little bit out the money to make up the difference. I'm looking at the 240s right now. About 87 cents a pop. I'm debating if I want to go back to a zero on it. I don't love doing zeros when I'm live with you guys because I know some people make boo-boos. Maybe I'll come back to this idea. The liquidity on this chain is not fantastic. As you can see, I'm watching the time and sales down here. So this is one thing I always do before taking a day trade. And you'll see me even with NVIDIA. I watch the chain a bit just to get an idea of liquidity. And the fact that we haven't had a buy or sell come through on the chain now for almost at least a minute, maybe 2 minutes, tells me that especially if I'm looking for a day trade, I need quick in and outs. Now, to be fair, the spread's tight. But I want to see more activity on this chain before I consider it for a trade. So yeah, it looked like just one came through in a full minute. That's why I said a 0 day at least. I won't see. I'm going to theorize the liquidity is much better. I mean, look, yeah. Within seconds, we're trading. Someone just bought 100 at 55 cents. Much more active. So I might pull the trigger on a 0 DTE on IWM looking for this triple top break, which right now is a triple top. I don't hate that idea at all. So if you like, actually right here would be my entry if we hold. Right around here. This is where I'd consider a 0 day on IWM if it holds. So I'm going to wait a little bit and we'll see. We're on the POC. You got the 50 MA here. You got VWAP here. A lot of people like buying that kind of thing. You've been making higher low, higher low, higher low. You're getting a wick here. I'm just going to pull the trigger on it. I'm talking about it. Let's stop talking about it and pull the trigger. What do you say? I'm looking at the 238 calls for today. All right, I'm long the 238s at 56 cents. If you guys give me a minute, I'll pull this up on the screen so you guys can see that as well. Or at least the chain, I should say. There we go. Pop back over to here. All right, so you got your IWM up here. You got your NVIDIA down here. Now notice we're right up to that resistance point on SPY. We got, what was that? We were 3 cents off on that last candle. from that pre-market high. So effectively, if you're including the pre-market high, excusing the wick, you're at like a triple top here on the SPY as well. Like I said, a little bit of volume, this thing's going to go. If we get some bolt, look, Qs are starting to participate. So if IWM also gets, we wicked that, we're pushing up now. If we can force a run here, we're going to have a very bullish day. Like a very clear skies kind of day. Look, VVIX starting to come down. This is what I just talked about. This is very important if we see VVIX and VIX dropping at the same time. So understand, VVIX is your measure of how volatile volatility is. If volatility is becoming less volatile and the VIX is dropping, that is supporting the thesis that the VIX will continue to decay, which is bullish most of the time, which is going to be perceived as bullish. Now, I will theorize that we see a more elevated VVIX throughout the day, even if VIX continues to decay, mainly due to the fact that we have CPI tomorrow. So VVIX might stay mostly elevated throughout the day, even if we see the VIX continue to decay and UVIX continue to decay. But that's not too shocking just because of what is in store for tomorrow, in my opinion. And even seeing the VIX rebound later in the day, so at the end of the day, wouldn't be shocking either, again, due to what's after hours, or I'm sorry, pre-market tomorrow. All right, we are breaking that pre-market high. That first price target has broken on SPY. So now you're going to want to watch 654.80 as your next price target. There's NVIDIA. Did we tap my first target? We did. We're right around where I said. I said we get about 145 or 147. So I'm going to take a trim here on NVIDIA. As foretold, there's your 15% gain. Voila, like magic. IWM still red for now, but that's okay. I mean, it's basically at the entry, so nothing too crazy there. Looking good, looking good. So we're going to want to see if we can have a continued push here on IWM. And if you're in a small account, you can, of course, consider a stop loss at break even if you'd like. You do whatever you want. I'm not your boss. I don't really care. Look, we wicked that first price target and came right back down. Now we're back at entry. This is why you always trim. You want to take profits. When the profits come, especially when you set out a plan, that was my price target. We hit my price target. Trim. Easy. Here's IWM. All right. About 12%. Let's see if I get a little bit more. All right, I'm going to trim a few here on IWM. That's 12%. Now, there's a way bigger fish here on IWM. Here we go. There's a way, way, way bigger fish. I'm just trying not to be greedy. It's a 0 day. I'm out the money. Or I'm at the money, I should say. I'm going to trim another one here. Or trim a few here. Lag. There we go. So that ended up being 21%. Again, we're still waiting for that follow through. It's not the worst thing if SPY back tests that area, gets comfortable with it, which looks like we made a wick there, and then proceeds on a continued rally. If we break that rally, if we break those pre-market highs, you're more than likely going to set in a trend day until midday, end of day, like 2 o'clock, where I would theorize we leave a wick behind and come back down a bit pre-CPI. That wouldn't be too crazy. But so far, 2 trades, both nice little gainers, little gains. Still looking for that bigger fish potentially. IWM has now left a quad triple top, I guess you can call it this. It's not exact, obviously, but you're making higher lows. This is a flat top breakout forming. This is one of my favorite. I don't trade shapes typically, but this is one of my favorite setups. When you have an area of resistance, which in this case is roughly around 238, 18-ish, wick and resistance move down, candle move down, wick move down. You have an area of resistance continuously rejecting as your lows become higher and higher. Higher low, higher low, higher low, higher low. When that breaks, you get a boom 9 times out of 10. That's my favorite trying to trade. So as long as we continue to make higher lows here on IWM, which you're getting a little sketchy here, you might not make that. That quad top becomes an explosive resistance point for a push to the upside. Yeah, this candle's not the best, so we'll see here in a little bit, but this still has solid risk to reward here. But nevertheless, this is why I trim out of my positions, right? You could have a little bit of bearishness. You don't want to throw money at the wall and see it disappear. So you always want to realize gains when you have the opportunity to, and manage your risk as you go throughout the trade. Ooh, all right, NVIDIA came back down. So we hit my price target, came back down about 3 candles in a row. Still, bulls are defending this 177.50 area. You're getting really, really, really tight here, so you're going to want to see to get out of this area in the next like 2 to 3 minutes. Otherwise, it's going to be a cut for me, which isn't great because I need the Qs to participate in the rally. For my thesis for SPY to work, which we're trying, I need participation from big tech for that thesis to work out. VVIX still staying pretty flat. VIX is pretty flat, but overall moving lower. All right, I really hate this on NVIDIA here. I'm going to give it 1 or 2 minutes because we could leave a wick and come back up. If we don't leave a wick, come back up, I'm going to cut the rest of my NVIDIA calls here because right now I'm still green on the trade. So I don't want to have a green trade go red, right? So still wait here because there's a good chance we leave a wick and come back up. Let's check out the other names here. Meta's looking like a good reversal. Look at Microsoft. Pushed above 500, consolidating at the POC. Red SAR here. Break that on the 1 minute. You're at least touching that 200 MA and potential push to, well, that would be high today, actually. This daily candle is going to look completely different. Yeah, that daily candle was just a red bar before, now leaving a lower wick and a higher body. So that's a much, 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 much better look on Microsoft. I'm not going to give up on NVIDIA yet. Not yet. Not yet. I still believe, based on what I'm seeing here, that if we do see some level of an overall market rally, then it's going to lead the rally. Believe it or not, I know it's still up 4% on the day. I know these contracts are a little bit more expensive. I know the IV is high, but all things considered, I think this is going to lead the rally today. Microsoft broke the red SAR. Meta tapping the 50 MA, pushing to the upside here. Google, this was unexpected. I really expected Google to just kind of grind lower today, kind of just chill out, nothing too crazy. But Google is only 10 cents off their all-time high after a phenomenal move the last few days. And it is about to make a new all-time high right now as I'm talking about it. Pretty crazy, honestly. That Google has so much resilience. And as you know, if you guys have been watching, I've mentioned on this program many times when I was originally long at 162.64 and I got out somewhere in this mess, that Google is your canary in the coal mine. As long as Google is bullish and continues to be bullish, as will tech and as will the overall market. So this is phenomenal. New all-time high on Google just breached. And it is strong, so we're going to look and see if some of that strength can pass over to the SPY, still sitting at its all-time high and high a day, roughly. Apple is just in the corner sniffing glue, so if Apple can get some lead out of its ass here, we could see a little bit of a support for the rally. Again, you don't want, if you're Apple long or an Apple bull, you want to see above 230 by the end of the day today. You do not want this under 230 by the end of the day. So bulls got to push this up pretty soon, and I would actually be pretty not happy if we get a hard rally on the whole market and Apple's actually lagging that rally, especially after their investor event, which isn't too surprising. That's very sell the newsish, right? Makes sense. I want to see Apple participate today. I want to see it over 230. I want to see it push higher. Tesla had a sharp sell, came back up, just kind of sitting at its middle point in the middle of the day. Amazon, very similar to Meta's chart at the moment. Come on, NVIDIA. NVIDIA is looking a little shifty here as the other names are starting to look like it's getting a little bit of action. So I want to see if NVIDIA can leave a wick here because it's looking a little burnt out on the 1 minute, and this would probably be the extent of where I'd allow it to cool on the 5. So it's got to get up in the next, I think I said like 2 or 3 minutes here. I'm still going to give another minute or two. Because it's looking like bulls are trying to keep it up. And because the overall market's still looking pretty supportive, I don't necessarily want to cut it just yet. And like I said, I'm still green on the overall trade, so I'm willing to take a little bit of risk here Again, to try to catch the bigger fish, as I've been saying. Okay, technically IWM did make a lower low here. So now you got some level of a little bit of a pennant here. Lower high, lower high, lower high, and arguably the same low here. So this is gearing up for a break one way or the other. And I'm betting on a higher break. SPY still chilling at the high a day. 654.80. That is the price you got to keep in the back of your head for the market. Breaking that, you should see volume. If it breaks that, I should say, we should see volume flood in and really get a hard push here. Qs are looking pretty solid on this move. IWM's trying to get up. I'm going to be patient on NVIDIA. We're looking like we're defending the lows here. It's looking like overall bull structure is being maintained on the day, as long as there isn't anything really coming down the pike in terms of news, which we just have Trump at 11:30. So it looks like it should be kind of quiet, at least between now and then. So assuming we keep the status quo here, we should get the move that I'm theorizing, barring any unexpected news, as long as volatility stays pretty calm, which is looking like the case for now. Guys, do me a quick favor. I ask you twice a stream. I'm going to ask you right now, if you haven't already, please interact with the stream wherever you are on YouTube, Instagram, X, wherever you are. Drop a like on the stream. Say hi in the chat if you haven't already. I've been talking to you guys, as you know. But any little bit of support for the algorithm, I greatly appreciate. And if you enjoy the show, please do me a quick favor. If you haven't already, pop over to the YouTube channel. Hit subscribe. Once we hit 500 subscribers, this will be an everyday show. So if you like the content, you want to see more, basically like today is just live market analysis. If you want more of that and more specific segments on specific companies, pop over to YouTube and subscribe if you haven't already. Thank you for your support. There's the cheap plug. Alrighty. The way SPY is looking right now, there's a case here that we get a back test of that that double top here in the pre-market, that 654.22 short term. That would allow a little bit of a cool off here before getting a rally and enough juice to push up to the upside. With that being said, Qs are looking explosive here. Like very, very good. Watch 583.15. We're right there. Qs are looking very explosive. It just needs a little push. And like I said, IWM is a ticking time bomb the way this is set up. It is just tick, 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 tick. That quad top breaks, it's going. This is pretty good. Volatility is still pretty flat. Your VVIX continues to slowly grind down. That's good. If you're a bull today, UVXY slowly grinding lower as well. My trust in NVIDIA seems to be okay. we're trying to get up still. Got knocked down a little bit. We're still trying to get up off the floor. Meta's trying to show some level of resiliency here. You're going to want to see Meta hang around this 755, 756 area for a little bit longer. And as long as it does, you should get a continued push to the upside here. Microsoft kind of had a fake break there. Like I said, we should tap the 200 MA. I'd look to reevaluate at that point. It is pretty hot. In terms of the MACD, it's a little hot. Your momentum's just chilling at pretty bullish, but just kind of hanging around the POC here. So there could be a need for a little bit of a sideways price action, some level of consolidation before that leg up. And Apple is really ruining the party here at low a day. It might try to sweep this LOI down here at 227.11, in which case, hopefully at that point, the Apple bulls can get their act together and stop trying to prevent what I want to see, which is a pretty hard break to the upside. So hopefully the Apple bulls can stop sucking. Tesla looking pretty okay, at least intraday wise. Amazon does look like it needs to cool a little bit, so we should expect some level of a cool down here short term. Overall, yeah. Had a rejection where I was saying Qs look explosive. They still do. You've basically, I'm going to give you guys key simple levels here. The high, or at least these wicks high, I'm leaving my crosshair on it so you can see it on the screen. 583.16 on the Qs. You can see right where I left it, 3 wicks on the day, arguably 4. So clear area of support and resistance. An IWM, 287.17. Pretty clean level. Those two levels break. I promise you. As long as volatility stays relatively muted, VVIX doesn't go above like 100, I promise you, that we see the pre-market high break on SPY. If those levels break on the Qs, which Qs are right there, we're 4 cents off, and IWM, there would be no reason to see the SPY not break 654.80 and continue a rally higher, assuming volume steps in above 654.80 and assuming volatility doesn't go totally out of whack, which so far it's participating. It's just sideways to down, which is what we want to see. And it's looking like NVIDIA's ready to try to get another leg up here, which is only going to help perpetuate a stronger move to the upside for the bulls here. Even though we're grinding down the fact that the bears can't shove NVIDIA's head underwater. Think of it like a beach ball when you're at the pool and you take a beach ball and you shove it underwater and you hold it there and you hold it there and you push it even lower. What happens when you push that beach ball lower and you move your hands out of the way? Whoop, comes right up and pops you in the face. And that's what NVIDIA's looking like right now, that we're trying to suppress it lower, trying to push it lower. And every time it's trying to get pushed lower, there's not enough follow through to the downside. Now, it's not out of the woods. You need NVIDIA over like 177.50, that key level, which actually, ironically, is POC. The green dotted line right now is actively 177.50. So getting above that will give you that beach ball effect to the upside, where you should resweep my price target up here at 178.13 and push high a day. And ultimately, I think these 180 calls could go in the money by the end of the day. Assuming volatility plays balls, assuming everything I already said prior. We have now had 4 rejections of Q's trigger point. IWM trying to gear up again. Those IWM calls sitting around entry. Those NVIDIA calls for what I have left here, currently red. Yeah, I'm not seeing any reason, at least now, I'm not seeing any reason that we don't get this push. And I want to stick around. I want to stick around to see it. I want to be live. I want to see it. I want you all to see it in real time, so you can see all the pieces pushed together, so you can see the full picture like I see. That's the whole point of this program. I want you guys to try to learn and try to build a little bit of a community here with you guys, where you could see all the little bits of the puzzle go together and you can apply that to your own trading. That's my goal. Okay, IWM is now a 5 time. I don't know what 5 times is. Pentatop? Right? Penta is 5. 5 times. Let's see if we actually get the push now. 1, 2, 3, 4, 5. The Qs, now I can't even count. 1, 2, 3, 4, 5, 6, 7, 8 times at this trigger point. So you have IWM and the Qs both at their trigger points. So this is a key point in time for today specifically, that if both of these can pop it right now, the bears are going to close out positions. We're going to get a little bit of a squeeze to the upside. This is all lining up perfectly. Volatility is lower. VVIX is stable around 99. This is pointing all signs up as long as we can break this resistance. If there's volume, if we break the resistance, there's volume behind it, we're going. NVIDIA is right around that 177.50, which again, I said it needs to get over that to be out of the woods, right? Once it's over that, the narrative swiftly changes to bullish on NVIDIA. So right now we're just above it. I don't want to get too excited. You broke the red SAR. You're over all your EMAs and MAs once again on NVIDIA. Again, a little bit of a push here. You're seeing some aggressive buying on your tape as well. So we'll see if there's follow through there. So guys, another thing I want to talk to you guys about real quick, and maybe I'll make a quick little video on this. Hold on. I want to wait and see if we get the break now. Here's Qs. I don't know how many attempts. 1, 2, 3, 4, 5, 6, 7, 8, and 10th time that we're trying to push on the Qs. The 10th time? Are we finally going to break out of the range here? Is it happening? Will it happen? I'm being silent for dramatic effect. Okay, the Qs are trying to get the push now. This is the first candle close above that trigger point. Now we're, again, not out of the woods. That's a very good start. Look at the 5 minute here. 5 minute, you've maintained bullish RSI. You're at 55. So that's over my, like I like to look at 54 as my sign for bullish momentum. MACD came all the way super red, negative, and now we're starting to flip over that signal line. So that's showing the long-term trend, at least intraday long-term trend. Intraday long-term, what a redundant phrase. Intraday near-term trend, I guess you could say, is starting to aggressively change bullish. IWM, on the other hand, left the pentatop. We are still at the pentatop on IWM. And SPY is not getting the follow-through just yet. However, NVIDIA is above that 177.50 area. Getting a few wicks here, so we're probably going to see some level of consolidation here before a drive higher. It's looking like, I mean, if you want to draw a quick and dirty trend line here, which it's not going to be great, I'm just going to put one here, dirty. Whoop. A little bit of a downtrend break potential. So I want to see, again, that 177.50 push higher. But it might float here just for a little bit and then go, which is still fine. I got time. I got all the time in the world. Well, technically, I've got until September 12th. So not all the time in the world, but until September 12th. Another higher low on IWM. This is just a torture chamber right now of just waiting and waiting and waiting and waiting. If you guys have any individual stocks you want me to talk about, feel free to drop them in the chat. I'll probably be live for just a little bit longer. Trying to see this move through. But I've been up since like 3 a.m. and I am very hungry, so I need to eat food. So I'm trying to give you guys as much guidance on this move before it happens. Hopefully we get to see it happen real time. But if you guys have any names you want me to take a peek at or anything right now, now's a good time to drop them in the chat. We'll take a peek. And then I'll say la vie, because again, we're doing this tomorrow and Friday as well. Come on, Apple. Apple is really ruining the party here. If we tap this 227.11 area, I will open calls on Apple for a day trade. We're down almost 3%, 2.6% on Apple. This is really poo-pooing the party here. I would watch that 227.11 on Apple today. Even right now, it might be early. Even right now. When does IWM invalidate? So specifically because it's a 0 day, depends on your risk tolerance. I would use the 50 MA. For me, I want this bigger fish, so I'm okay with taking a little bit more risk, because if this does push, these are going to be worth like 200, 300% easy. So this purple line on my chart, there, 50 MA, as you can see, it's been respected pretty well. So I'd use your 50 MA, even this POC here. If you want to be super, like if you want to be lenient, you could even use like VWAP. That's general area. I mean, it's such tight price action, and I'm just very bullish on the day overall. So as long as the narrative doesn't change, I'm willing to be very patient on it. I might move it out to a 1 DTE just to de-risk the time risk. But also, we're right near the money because it's 238s. This is 230. We're trading 237.84. I would say it kind of depends on your own risk tolerance. Like I said, for me, I kind of want to catch a little bit of a bigger move here. And that's not me being greedy. It's just looking at the whole picture. Which right now we're getting a little bit of bearishness. But looking at the whole picture, the opportunity is looking pretty solid. So far, we've just made higher lows for the most part. Exception of a few areas, but overall higher lows. And this 5 minutes very high and tight with a flat top, essentially. And again, the flat top is like my favorite setup. And even if you're just looking at the 5 minute here, we've mostly made consistent higher lows with just the same highs, essentially. And those are the moves, especially on an IWM, especially off the back of PPI, where I would look for an explosive move on small caps specifically because of how PPI could affect small caps. So getting some hype around it on this flat top break would make a lot of sense. So it's not just straight. I mean, it is technicals, but it's not just only technicals I'm kind of looking at here. So I'm kind of giving a little bit of wiggle room, more than I normally would on a 0 day. But that being said, it's still around my entry overall. Like, it's not crazy. So I don't know. I can't really give you a direct answer on that. I'm looking for the move. If we hit 6 times, if we tap the 6th time at the top and we don't break it, what I'd probably do at that point is trim again and put a stop loss on just to de-risk. And then I'd look at potential like a 1 DTE if I still like the idea. Hopefully that helps. What else we got? How about eBay and Jack? You know, I saw people talking about Jack. We'll do eBay first. eBay! You should all know what eBay is. All right, for eBay specifically, let's take a peek. Zoom out a little bit. All right, so looking at eBay, looking like you had some level of a decent cup here on the weekly. Came up. We never really got much of a handle. Just kind of went to the upside. Looking on the daily, had a nice little gap up off of earnings, pushed a little higher, came back down, and now you're kind of just floating around above that earnings gap, which you kind of back tested right here on the 3rd, getting a little bit of push up and level of consolidation. I like it for a long, assuming we hold the 50 MA. So I think we're going to kind of float around here a little bit longer, let the 50 MA catch up, and as long as we're above that earnings gap, I actually don't hate this idea at all. So if you like eBay, personally, I'd wait for the 50 MA to catch up, and I would put a stop just under that earnings gap. So anytime I put a stop in, I don't want to put it in too close to where my like cut point is, because if I put it too close, then sometimes you could get wicked out. So I like to give a few more shekels lower. So the low of this candle is 87.48. Low of this candle is 87.95. So if we're looking at 87.48, maybe you put a stop at 86.95. That way it gives you a few pennies below the whole number. That allows the 50 MA to catch up. I don't hate an entry at 90 cents. And even if, let's do a quick little risk assessment here. If you assumed an entry right around now, it's 92, we'll call it 92.21. You put a stop on, what I say, 86.95. Stop at 86.95. And let's assume you're just looking to get back to all-time highs at 183, to be conservative, right? Profit, 183. So let's see what your risk looks like. All right, so you're looking at a 1.6 to 1 risk to reward ratio. So you're risking about 5% drawdown for 10% upside. And that's only assuming all-time highs. Now, if all-time highs break, could keep going, obviously. I don't hate this. Whenever I'm taking an equity trade specifically, I want to look for at least a 1-to-1 risk to reward scenario. Obviously, you don't want to be upside down on your risk. So if you're patient, maybe wait for a few pennies lower, where this could drop even down here. One more dollar now puts it at 2-to-1. And if you get a little bit lower, what's the wick here? This one is 90.62. So 90.50. It's pretty close. Almost 3-to-1 risk to reward. So if you get a few pennies lower, that risk to reward greatly changes. Where now you're only risking 4% for almost a 12% upside. It's pretty solid. So I don't hate eBay here. I think it could be a decent setup if you're patient. I'd give it a few more days. Let it come down a little bit more. Let the 50 MA catch up, and then you probably get a better entry with a tighter stop loss, because that's especially with what we got coming up with CPI and FOMC. You probably want to have pretty tight stops if you're considering equity trades. So that's what I think about eBay. Cool. Hopefully that helps. Let me just swing back to our trades real quick, and then we'll look at Jack. All right, SPY got a little bit of rejection there. Back to the VWAP. Q's rejected. All right, IWM is not looking good now. I'll give it maybe like 5 more minutes, and then I'll probably close out the rest. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 11 out of the last 12 candles have been red, though. Typically, when I see a strong move like that, I am a little patient. Even if I want to realize the rest of these at a loss, I'll wait for a mean reversion. In this case, a mean reversion would be probably back to the POC or even VWAP before closing out the rest, because I don't want to sell, especially on a 0 day, onto the down when volatility is going against me here. So I'll wait a little bit longer, maybe like 5 more minutes if I want to close these out of the loss, or in 5 minutes if we can break above that and reverse the trend, then I can continue waiting patiently. As for NVIDIA, we pushed above. Look what we rejected. We actually went a little bit higher than my price target, which what did contracts get to at that point? 144. So basically around the same kind of trim point. But we tapped my price target again and rejected again. So you want to look for a higher low here, break it, and then push to the upside overall. Let's go to Jack. Negum, if you're taking off, have a great day, my friend. Thanks for popping by. See you tomorrow if you come by. Jack's an interesting one. I've seen a lot of people on social media talk about this one. And here's why. Here's the monthly. It's down there. So this is the monthly for Jack. You're currently sitting around its POC down here on the month. So if we're encompassing data all the way back to 1997, the POC is 1724. Currently trading at 1853. Let's zoom in a little bit and get at least with the recent times. That localized low on here, 1663, and then we wicked a little lower at 1653. Just in general, here's their weekly chart. Kind of trying to put in some level of a base of a reversal here. In general, I don't hate a name like this if you are an investor. Specifically if you're an investor, because this ain't good. This is a drop, right? So if you're an investor and you want to scoop up a potential diamond in the rough, right, with a pretty tight stop, because even if you want to consider what I say was 16 something, right? The POC back to 1997, 1739. You could even just risk recent lows. That recent low, we kind of made a double bottom here on the month, 1653, 1663. So even if you risk 1650, let's run a risk analysis and see if we got in today, we risked 1650, what our risk would look like. So let's get in today, 1650 stop. Assuming our entry is currently at price. And let's assume, let's look at a conservative gain here. Basically right around here, 21, we'll call it 21 even. You got a wick here, decent little resistance there. So $21 even seems like a decent resistance. So let's be fair, again, leaning more on the conservative end of things. And this is near term, right? So our risk to return ratio is 1-to-1. Like I said, that's kind of what I like to look for. It's a little bit over 1-to-1, which isn't more in your favor, obviously. Again, this would be more for an investor. Now, I will say, looking at the daily chart, it looks not good. It looks like it's going to continue lower. You have this green star here, so if the green star pushes lower, you're probably going to break even lower here. If you want to be mega patient, let this come down again, and now you can look at your entry maybe down here, 1740-ish. And I move this to 1717, and now your risk to reward is like almost 3-to-1. This, as an investor, if you like Jack in the Box and whatever, probably an okay idea. As a trader, you're going to want to keep a tight stop on this one. For a fall like this, so this is the daily chart. This was almost $50 9 months ago. This is one of those names where I'd want to actually dig into their fundamentals a little bit more closely and see what's justifying this fall. Because you also had earnings right here on early August, sold off afterwards. So I'm going to want to take a peek. Earnings prior to that, hard fall as well. I'm going to want to take a peek into their books here, specifically on this name, to get a better idea, because there could be something else kind of lying beneath the surface here that we're not necessarily seeing on the chart. So as an investor, there's opportunity here with risk, with a managed stop. But if you're not careful, this name could have a reason that's falling this much. It's falling pretty hard, right? There could be a reason behind that. So this is one of those names where I would personally heavily suggest you consider looking a little bit deeper into fundamentals and seeing if there's a reason why. Now, with that being said, you are building some level of a base down here. There's higher volume down here, so we're seeing more people becoming active down at this price level versus on the fall. Now, you're selling on higher volume too, but that higher volume is still substantiated down here as we built some level of a base. So there is some level of truth to it kind of holding and trying to build some level of a base here before getting a reversal. So I don't hate it for that regard from a technical basis, but there's no doubt on the daily here, it's looking like it could stay bearish, especially below the 50 MA. And on the weekly here, again, it's trying to hold this POC, but it is in a downtrend. It is consistently in a downtrend on every chart we're looking at here. As an investor, I'll keep saying, if I took a deeper look, I might be interested, because the risk reward's not awful. Especially if you're looking to get back to like $50 eventually, then it's fantastic, right? But Sometimes you find companies like this that are beaten down and they are good brands, and those are my favorite kinds. I love buying fantastic, recognizable brands when they're on sale, because those brands, especially if they've got a bad business model, they got some mud or something happened negatively, they can be swept up and bought out a lot of the times. There's some flexibility there because the branding's strong. The product is good, the branding's strong, and it's on discount. I don't hate those companies. With that being said, this market cap at its current evaluation is only 350 million, so it is a smaller cap company. So keep that in mind. That also puts them into that conversation of being bought out. What if, again, I'm just throwing out a name, it probably won't happen. What if McDonald's wants to buy out Jack in the Box? Guess what? They buy it today for market value, 350 million. They buy it at, maybe they buy for 2x market value. It now goes for $36 a share. Just looking at market cap, right? So keep that in the back of your head. When you see a strong brand beaten down, it has a good product, and even if they might have their financial issues, those opportunities are rare, but when they come, they tend to work out pretty well. Walgreens was a good example for me, where I took advantage of Walgreens when it was on the low and they went private, right? Because you could have Jack in the Box go private as well and buy out their shareholders at a better price, essentially. So there are opportunities just like that. If you're patient, you just have to kind of wait and not buy when it falls like a little bit up here, but wait for when it's really in the doldrum, it builds out a base, and then you might consider a stake in a company like Jack. Hatchet says, when you look at the flat top, what defines the tops? 1 minute wicks, 1 minute bodies, 5 minute bodies, or question mark? So I assume you're speaking in reference to IWM. We'll get back to that and see, did I get smoked on it? Yeah, we tapped the 200 MA. So we'll see if we get a bounce here. So essentially, I prefer looking at wicks. But like, for example, if I'm just putting my crosshairs up here, just look for a general area. Some people, like, I like to draw lines where it makes sense and where there's specific areas of where the price reacts. But sometimes you get a little bit of a zone. And clearly in this case, the zone, 238.16, and then the high of day at 238.27. It's like 10 cents, right? And you could see, looking at the 1 minute candles here, leaving a wick, leaving a wick, leaving a wick, leaving a wick, wick, showing selling at that price level over and over and over and over and over and over, right? That's where you want to pay attention as a flat top, especially as you get those raising those highs continuing to the upside. Now this invalidates it, and I was too busy talking about Jack, so I'll at this point wait to see if the 200 holds. If it doesn't, I'll get out. Be cut and dry with you. Yeah, that's it. Doesn't mean this can't break later on, but with a 0 day, I want to, again, keep my risk a little tight. Now, with that being said, this is burnt out. Like, on a 1 minute move, this is a hard move here. This really should get some level of a rebound here, especially on this volume, leaving this wick behind. It really should reverse to the upside. Qs have been holding that trigger point. SPY came down a little bit, but it's trying to get a bounce as well. So, especially if we lose the 200 here, I'll close out that 0. But I will say, looking at NVIDIA here, we're now at 145 on those contracts, heading towards high a day. So looking pretty solid there. Toby said that's ugly. Speaking about Jack. Profit margin went negative, so that's not good. Okay. Yeah, I mean, that would obviously be a good reason why the stock price took a little bit of a tank. Let's look at NVIDIA here. I'm going to look to take profit here near the highs and before the high. So I'm actually going to take some off right around here on NVIDIA before we tap the highs. Get back to my screen. There we go. All right, so it's going to be 19% there on NVIDIA. And to be safe, I'll stop loss that one at break even. Because essentially, if it doesn't break the high a day here, there's a very strong chance that it's going to come back down. It needs to break the high a day here. This is looking like a solid little push up, cool off, build a base, break, and then really like hammer it home, like go hard if it breaks that high. So this is looking pretty solid. IWM, on the other hand, backtesting the 200 MA, not looking good. Good volume reaction down here. So you're seeing a reaction on that 200 MA support. Needs to hold. If it doesn't hold, I'll close out the rest there. So, but thankfully that NVIDIA trade well paid for. Even if I close it out here, I'm still very green on the day, which is all that matters at the end of the day. Come on, Qs. This is so annoying. It's so close to getting a break here. I don't want to see a very tight price action day on SPY again. We've seen the last like 2 days been like very condensed, and I think we need to see, what I would like to see is a hard push to the upside, leaving that wick and coming back down and closing in this kind of range, because I think that's needed. I think the market needs to blow off that steam pre-CPI. I think that would make the most logical sense. The high a day on those NVIDIA contracts is 190, just so you guys are aware. And we are near the high a day. Do we actually tap the high a day? We did not. We're near high a day on NVIDIA. So you're going to want to pay attention here. This is why I trimmed out here, because there's a good chance we reject right here. But if volume steps in, we break this, you're going to have a melt-up candle real quick. So we're going to watch this on the 5 minutes, see what happens. I'll trim a little bit more here, actually, now that we're up this high, because I got a few more dollars here. And my next trim, just for context, will be runner size. So that's 30% on NVIDIA. Not bad. Okay. Cool, cool, cool. So now we're just watching this high a day break. And IWM is just a turd now. Straight turd energy. It's unfortunate. There's the high a day. Let's go. Let's go, NVIDIA. Push me in the money. Notice your level 2 here. Big wall, 179, broke through it. Now we're starting to push to the upside here. Again, remember, the high of those contracts was 190 today. Currently, those contracts are at 178. I'm only $1 away from going in the money. I'm going to want to go to runners here pretty soon. Like I said. I'm waiting to see. Let's go on the 1 minute. Actually, I want to go a little bit closer. All right, I'm going to go to runners right. Ooh, I want to give it 1 more second. That's good volume on the break. See the high a day break on a higher volume? Should see a continuation here. A little bit more, a little bit more. All right, now I'm going to runners on NVIDIA here. 47% gain. Keep that stop loss on. You ride the rest. Look at these. Look for these to go in the money today. Over that 180. 180 is going to be a hard resistance point, but over 180. Again, I know it sounds crazy because we're already up almost 5% on the day. There is a possibility, a realistic possibility, to push into that resistance zone around 183.30. With that being said, whenever I go to runner size on a position, the meat of my position is resolved. I've made the most of my money. I'm in a very small chunk now. And look what happened as I went to runner size. There's a reason. We broke the high. Was looking a little weak there. Volume pushed on the high and just not as much on the second candle. So I wanted to get out. Doesn't mean we can't keep going. But I wanted to realize those gains there. As I go into runners, they're at a stop loss at break even. So even if, things hit the fan, at least I didn't lose any more money on the runner position, and I'm not risking any additional. I get to take advantage of potential continued upside. If you're in a much smaller account, you should consider, especially if you're just watching someone like me and trying to learn, if someone goes to like runners and you don't have the ability to take a runner size position, one of two things: don't and realize those gains, because compounding those gains is going to help build your account bigger and bigger and bigger, or move a very tight stop loss. So if I got out most of those, or went to runners, I should say, around 180, 185, and you still want to have a position, a runner size position, maybe you leave like a contract on and you put the stop at like 160, 165, where you're stopped in profit. I just wouldn't do that if I was in a much, much, much smaller account, unless you're looking for a much, much, much bigger move potentially. But in this case, like I said, getting over the high a day with some volume there is what's needed, and getting over 180 is going to be a decent resistance, so you don't want to be greedy. Pretty good day. Pretty good day. All right, let's see if we can rescue this IWM. I'm not very... Should base out here. So what I'll look for IWM, in this case, these contracts are actually holding their value after we broke the 200 MA. They're actually not depreciating that much. When it was around the 200 MA, they were about 22 cents a contract. Now they're only at 19, so they're not actually depreciating that much. And you're seeing some volume down here as well. So I'll be patient still. And again, now at this point for the rest, I'll probably look to mitigate the loss unless we get a big push here, which again can still happen. Volatility still playing ball. I don't like this VVIX push. That's not good. But overall, Qs are still playing ball, so there is still a chance. But I don't want to play on hope or anything, because that's not how you should be trading. Good close there. Good runner push there on NVIDIA. All right, guys. My throat's really dry. I'm very hungry, so I'm going to go eat some food. Hopefully you guys took something away from today's show. And don't forget, tomorrow and Friday, I'll be live once again at 9:15. Same bat channel, same bat place. So hopefully you guys learned something. Again, if you haven't, please drop a quick little like, subscribe, comment, whatever. Helps me out in the algorithm. I appreciate it very much. And don't forget, some say you need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys. Please trade smart. And don't forget, we have CPI tomorrow, so be careful towards the end of the day, especially if you're swinging anything. Okay? Have a great day, guys. I will see you tomorrow at 9:15 a.m. Take care.
The time has passed, and that's a wrap. You're on with the angle and your plan of attack. While the show is at an end, you're